Hey everyone, Kevin Schumacher here with the Kevin Schumacher Team at eXp Realty, bringing you this month's market trends. As many of you know, we compile a lot of statistics and data from our national analysts as well as the regional and local databases, and really put all those numbers together, the news and everything that we can find to share with you and give you our opinion of where we are in the market and how that's affected our current market and your equity position. So many of you have probably heard of the V-shaped recovery that we've been experiencing. And what that is we look at the housing recovery index. That's based on supply, demand, price, and days on market. And what we found is we're actually exceeding pre-pandemic levels, which is really surprising, and I don't think anyone ever would have predicted how fast the housing market, at least, has rebounded and changed. When we look at the year-over-year change in numbers, we're seeing that showings are actually up 60%. Purchases, 25%. When we look at existing home sales, 10%, again, this year compared to this time last year. And then we look at new construction sales, 43%. The big difference is inventory. Our current inventory, based on where we were this time of year versus last year, is down by 35%. The magic question, million-dollar question is what's the trend? What's going to really guide us through this? Are we going up? Are we going down? Well, when we break down, we look at consumer spending. When we go back to April, which is really the first month of the whole COVID that really hit, consumer spending was down by 31%. Now looking at September 1, looking at those numbers, we're actually only 4% down, which is still unfortunate, but considerably a great recovery so far compared to where we were back in April. So when we look at the different regions and we break those down, when you look at the orangish brown color, those are areas across the country that are pretty much back to normal, seeing positive gains in consumer spending. When you look at the blues, you're seeing areas that are somewhere between that 5 to as much as 15% below where the consumer spending was. And a lot of those areas that are, Colorado being one of my, we look at, we're about 13.5% down. A lot of us are ski country. So a lot of the ski resorts in those areas, mountain areas that are still recovering from not having the tourists and the people back at the levels that they're historically used to. The other thing that we look at is the unemployment. What's the unemployment rate looking like? So when we look at back in March, we were at 4% unemployment. April, it jumped to 14%. Now we look here in September, we're actually at 7%, where 7% is still not where we want to be, but again, a lot better than what we anticipated when this all first started, and there was just a big question mark of what's going to happen and where are we going to go. So when you look at the comparisons of the unemployment based on eras where we've months where we've went greater than 9%, you would go back to the Great Depression. We went 108 months consecutive with greater than 9% unemployment. Next was the Great Recession, was 30 months, and then we go to the 80s in the oil recession, and that was about 19 months. And now here we are with COVID, and we're about 4 months. So again, we're coming back faster than anticipated, and still hoping that we continue to make some progress and some continued gains. The other thing that we look at is what has this market done for us, and what does it mean for us right now? Well, it's equity. When we look at all of the homes as we compile all of the data in the nation, 42% of the homes out there are actually paid for. And then when we break that down and we look at homes that are on the loan with loans in equity positions, over 70% of the homes in the U.S. have greater than 50% equity in their home. Now, we take even a little bit of a closer look at that. We look at the year-over-year change, and when we look at that, we're looking at the year-over-year change. We're looking at approximately an equity gain of on just the second quarter alone, an average of $9,800 in equity over Q quarter 2. In some regions, we're seeing as much as $20,000 in equity that has been gained. So long story short with that, a lot of people have really come out of this pretty fortunate and are sitting in a really good position from an equity standpoint. So when we talk about equity, we talk about low inventory levels. What that means is that the likelihood likelihood of us going into a deep recession similar to the 2008, 9, and 10 mark, where we've seen a lot of foreclosures, is not as likely. Granted, will we have foreclosures? We will, but not near to the levels that we had them before. You also layer in the record low interest rates that's under 3%. That's really helped a lot of people as far as that maybe were in a pinch or a struggle, or able to refinance, pull equity out, or be able to at least lower their monthly payment as well. So when we break down the numbers a little bit more, we also look at, is it a buyer's market? Is it a seller's market? So what you can see by the graph is our norm is about 6 months. The norm for a buyer's market and seller's market is about 6 months. So less than 6 months inventory, we're in a seller's market. More than 6 months inventory, we're in a buyer's market. So we have been in a seller's market in Colorado and here in the Front Range for several years now. And the industry right now, the nation right now, we're about a 3-month inventory, where when you look and we break down the numbers here in a second, we're around a month to even less than that here in the Colorado Front Range. So speaking of numbers, let's just jump into it. When we look at breaking down all the numbers in the inventory, Larimer County, we look at actives, 636 homes currently on the market, 614 homes sold last month. That number is actually down by 6%. Average days on the market, 67 days. Average sales price, $537,000, 1.1 months market inventory, so just a little over 30 days, 35 days or so in as far as inventory. And then we're looking at that number actually dropped by 8%. Now we go to Weld County, one of our larger counties, 661 homes currently on the market, all in Weld County. Of those, 581 sold last month. We have that number's down, the inventory's down 4.6% compared to the month before. We're looking at days on market, 65 days on market, and average sales price, $420,000. Month inventory wise, again, we're looking at 1.1 months, so right about that 35, 36 days or so. And then that number also is down about 8% compared to our last month. We look at Boulder County, one of the more expensive markets, 434 homes currently on the market in Boulder, 355 actually sold last month. That number is actually down 15%. 54 days, average days on market, 835,000 is the average sales price. That number, for his inventory, 1.3 months inventory, and that number is actually down 7% compared to the previous month. And then our largest market, the Denver metro area, and these numbers are just hard to really put my arms around. You're looking at 1,946 homes currently on the market. Last month alone, 3,129 homes sold last month. So you're looking at a third more of the homes sold than the inventory that even hit the market. So that inventory is shrinking really fast. And the thing with that is the northern Colorado area in that region is typically 6 months behind Denver. So we usually track and we pace what Denver's market's doing to know when we're going to feel a slowdown, and based on those numbers, it's not going to happen anytime in the near future. So the units sold is actually down 5% from the previous month. 21 days, average days on the market, 565,000 is average sales price. That number is actually down a little bit, and we're looking at inventory is right at 0.8 months, so about 23, 24 days inventory, and that's consistent what it was the previous month. So, as we always talk about, it's really about equity, and equity really drives people's decisions and affordability as well as interest rates. So we've seen a lot of our clients that have decided to make a move sooner than later, whether it's retiring, whether it's getting into that larger home, whether that's tired of renting and being able to buy a home and pay similar dollars in actually owning a home. All of these conditions have been very conducive to home ownership. So if there's any questions that we could ever answer for you, myself, my team, we'd be happy to do so. We're here for you. We appreciate all the referrals, and that's really how we grow our business. And but the number one thing is how we can help you, give you clarity on decisions that affect you, your family, and one of your biggest investments. So again, I appreciate your time. If you need to reach us, team number 720-230-3030. You can always reach us and find us at kevinsellco.com, and we'll look forward to seeing you next month.